Are you curious about the precious metals industry and, in particular, physical gold and silver? Well, I speak with Brandon Green from Neptune GBX. He's an expert in this bullion space, and we discuss various options for buying physical gold and silver, storage, as well as where we think the metals are going in terms of price. So, if you like this video, please don't forget to like and subscribe, and let's get right into the interview. Today, everyone, welcome to Financial Liberties. It's Vin Maru, and today I have a special guest on. His name is Brandon Green, and I met Brandon probably over 10 years ago, and he works in the bullion space. So, we're going to be talking about metals today, uh, precious metals in particular, the gold and silver market, where we see it going, as well as maybe getting into discussions on buying physical gold and silver, whether you buy it personally to hold in your own possession or consider storage and vaulting options. So, Brandon, introduce yourself, maybe give us a quick background of who you are and what you had done in the past, and then we'll get right into the metal discussion.
Sure, thanks, Vin. So, yeah, my name is Brandon Green. I'm currently Director of Wealth Sales for Neptune GBX. This is a precious metals dealer and vault provider that works primarily with individuals and wealth managers throughout the USA. I started in the business about 2010, where I interned at a company out in Vancouver, and then since from then moved on to Sprott, who's a very well-known name. After that, to a precious metals firm in Grand Cayman, known as SWP Cayman, and then over to Neptune about 3 years ago. Been in the business now for, yeah, about 15 years, and various other industries before that, but precious metals within the wealth management space for quite a bit of time.
Wow, that's great. And I've been in the metals since 2005, providing some coverage on it. And like, I took a break around 2012, 2013 when I saw the metals peak out and I figured we were going into a bear
Interesting.
market.
Yeah,
But
interesting.
for kind of the last couple of years, the metals have risen significantly. And I think we're in another bull market like we saw from 02 to 2012, 2013. That was a 10-year run. And I'm assuming the bottom of this latest bear market that kind of ended a few years ago. So we're only 2, 3 years maybe into this next bull market. And I think
Hmm.
you and I had met when you were working at Sprott. We had a discussion back then, which is probably
Hmm.
about 10 years ago. So
Yep,
it's kind of interesting that we're kind of circled back together again right now. And now we're going to be having a great discussion on the metals itself.
absolutely. Yeah.
So, I think in 2022, the metals seem to have bottomed out at 1650 on gold, and I think it was just under 20 on silver. And today we look at gold, it's over $4,200. Today silver is above 60, which is phenomenal to see a run almost 200% on silver over a couple of years. Um,
Hmm.
What's your take on it? Like you're more boots on the
Sure.
ground dealing with people buying bullion and wanting it whether it's stored or not. Um, and you also deal with some institutional buyers. So
Mhm.
what kind of gauge are you getting from clients right now in terms of where the price is at and where they think it's going to go?
Well, it's an interesting time because we have gone through two. Well, I have not gone through. I was very, very young when silver first hit 50. So, and then it also hit 50 again, or give or take within a dollar. And we saw it come back down. And gold's been inching up for, yeah, forever, since 2000, or really is what a lot of us like to look at it. So right now, actually, we're almost about to hit 4,300 gold, and we're hitting about well over 60 silver. That $50 mark for silver was definitely a huge support level or resistance, which is
Yeah.
now completely support. From once we established a good ground from there, we have seen these old owners. If they've sold out, there's now less sellers than buyers. But saying that, what we've been seeing in the physical market world right now is the retail is actually selling a little bit more than the institutional, than the big money. Right now, the retail side of things, the smaller bars and coins are pretty cheap in relative to spot price, but the larger bars are not. They are not coming down. The spot price is going up. So this happens every time. It happens every time, and the retail investor gets caught, right? We see this every not every all every specific time is that these premiums come down, the spots go up, and it's retail selling and big money buying, and then it keeps going up, and many retail traders are on the buyers like us are on the wrong side of the trade. So when I'm seeing that right now, even though I'm seeing it, new highs, it doesn't matter. It doesn't matter. Silver's made new highs. This is the third time now, right? Those the other 50s. Now, look at this. Gold was $50, $60 at one point. It hit new highs, 200, 1,000, 2,000, 3,000. The mentality that it because it's a new high, it has to come down is completely it's irrational. Right. And right now, what we're seeing in the silver market, it's not more of a technical side of things. It's more fundamental. We're seeing with all of the solar getting bigger, all of the chips, the data centers, all of this is coming into play. And this is why the big money's getting in. And the retail seems to be selling a little bit. So I'm trying to advise clients right now to ignore that. It's actually a really good time because you're getting a great deal in relation to spot price. And one other last thing I would say is that I've been writing about this a lot lately, and I've seen silver catch up to gold in relative ratio, right? Long-term history, 15 to 1. But really in the past 100 years, you saw about 30 to 1 for a long time. Yeah, it went to 100 to 1, but we're really coming back down now to in the 70s, which is nice.
Yeah. Yeah, I mean, I've been watching it and I've seen a lot of fundamental
Yeah.
industry. So I did a interview with Michael DiLorenzo from the Silver Institute a few months,
hmm
and I'll link that in the video in the description below. But Michael really stressed the demand that's coming in from the manufacturing industry. Now, AI data centers is one thing, solar industry is another. And even though we've seen a big boom in solar for a decade, it really didn't add a lot of pressure to the price of silver. But I think there's a lot of factors that are underpinning the price of silver right now. And as you mentioned, at $50, which was resistance points two different times in the past, we've now blown past it. So I always think that, at some point the silver market will probably continue higher, and I'm expecting it to peak around February, March is when the
hmm
seasonality that
Yeah, it
to come in
does.
as
Yeah.
a high. And then if we pull back in the summertime, which is kind of the low in terms of seasonality, so this would be now summer of 2026, we could see that retest of the $50 or just under 50 on silver, but I don't think we're gonna go much below that anymore. There was a point where, I thought 50 might be the resistance and it would touch that and maybe pull back to about
Yeah.
35,
Yeah.
but it
Yeah.
never really did. It went to that 43, 44 mark, pulled back to about 37, I think it was.
hmm
Now, wow, we've just had a great run, a double from the 37 low. So I don't know how much further it's gonna go up from here. I suspect it will, but I would be happy even if we just sat and consolidated in and around 50 for a while before this next leg goes up. And
hmm
in fact, given the gold to silver ratio that you had mentioned, where we're in the mid 70s now, at some
Yeah.
point, I do think we're going to get to that 30 mark or maybe even lower.
Well, just today, yesterday, I was researching what the consensus is, right? Because everybody's putting out their forecast for 2026,
Sure.
right? And you got to imagine that these people they're being very careful,
Yeah.
right? They don't, they want to be right. They don't want to overdo it. They don't want to underdo it. There's a lot of thought put in there, but it's really all over the place. Gold between, some of the big banks, UBS, Goldman, and JP Morgan, Bank of America, they're ranging 4,000 to 5,300.
Yeah.
So, yeah, that sounds. pretty reasonable. But on the silver end, it's what's really interesting is you have these larger banks kind of like saying it's not going to go too much further in like around 60, which I think they're hedging their bets. I think they're a little scared to call that higher number, right? It's just, you can get stuck and you can get called out on it. But a lot of others, some big technical analysis, some, a lot of modeling that people are doing and going and forecasting and even huge, big players in the silver mining like Keith Neumeyer, he's calling for above 100. Much smarter than me. So there's a lot of reasons to actually think that to say, okay, this can be a new floor, and it's time to look forward rather than backwards about what it was and what it could go back to. I think we got to think more forward here, and we're in a new era of at least that metal. And gold will trade with the fear. It will trade with the dollar. It will trade with bonds. It's a little bit more of that monetary. It's a monetary metal, right? Silver has a little bit of it, but the fundamentals in that sense right now are coming in strong, and it's not something to ignore.
Yeah, absolutely. And with the industrial demand, as more mine supply comes online, whether it's
Mhm.
byproduct from other metals, I mean, we could see silver come into play. But one thing I noticed, and I just found an article on it recently, was JP Morgan
Mhm.
actually now long the metals, and they started covering their silver short position starting in this past summer, fully covered by
Interesting.
October. And
Yep.
now, I mean, since October, we've had a great run on it. So, you know, I'm wondering how much more institutional investor demand is coming in from silver. Now, the one thing I just note came out with today, and I posted it online, and I'll share it here, is India has just announced their pension funds are now able to buy
Mhm.
gold and silver ETFs. So obviously, India is a big uh, source of demand for the metals.
Yeah. Mhm.
That's because they've always valued gold and silver as money more than most other countries around the world. And now to see a country that size and the demographics they have of over 1.3, 1.4 billion people,
Mhm.
and even if 1% of that pension fund money comes into the metal space over the next year or two,
Yeah.
uh, I can't see a scenario where we go much lower. I mean, we could be in a trading range on the metals itself, like even on gold. Could it go back to 4,000 again or 4,3,800 in terms of a technical trading range? Sure, but I think that would be a great buy opportunity.
Well, you mentioned you just kind of restated what I was talking about earlier was the institutional
Yeah,
buying, right? So they will buy, yes, ETFs or physical. They could buy physical or futures or a derivative of some sort, but they will be backed by large institutional bars, right?
yeah,
Large
absolutely.
kilo bars, 100-ounce gold, kilo gold bars, 100-ounce gold bars, 1,000-ounce silver bars, right? Which are the ones that are tricky to get at the moment, right? That those are the ones driving up the spot price. So if they continue to buy that, you see the spot price continue to go up, which silver, that's essentially the silver price. That's what's driving it. It's one of the factors that's going to drive it, and it just completely makes sense. So that news alone, I mean, they're not going to do it all at once, so you're not going to see the price move all at once, but it will factor into what the global supply is and the output and how many people are selling. And I mean, the retail sales that I'm talking about, people selling, it's small potatoes compared to them. It's absolutely nothing, right? But my job is to make sure that the retail is on the better side of the trade. Right. So this is what you want. You can buy whatever you want. You can invest whatever way you want. I mean, all types of physical and so forth. But hopefully you're on the right side of things.
Sure. Well, and when you were working at Sprott, I mean, Sprott their metals physical trust, I believe it
Mhm.
was.
Yeah.
Um, so you had that. You had the SLV, the GLD as an option for ETFs to buy into the metals, the physical metal space itself. And a lot of
Mhm.
people complain it's a derivative, a paper market. They don't trust it. I don't know if I agree with that per se. Um, But seeing what India is doing now in allowing it, imagine if other countries around the world all started wanting to get into their own physical ETF for the metals. You're going to see so much demand coming in on these large bars you're saying, and the premiums on those won't come down at all. And I think just India announcing this is going to open up the floodgate for a lot of other countries to look at, either creating their own ETF or buying into the existing ETFs that are backed by physical.
Well, they are buying physical too, just themselves, right? They will go into that space where they'll lock themselves in London or other various places with the larger bars, right? Especially the central banks buying a lot of gold that way as well. So whatever way they want to buy it, I mean, it supports the price, right? They know what they need to do, so it's just going to support that spot price.
Sure. Um, I had a thought yesterday. I actually posted about it today. And it's really was a lot of retail people saying, oh, they're buying it because it's going all up and whatnot. And they all bullish on it. Great for them. I'm bullish on it too.
Hmm. Hmm.
But it's funny because being a gold bull from 2005, I started learning about it as a monetary instrument and learning about central banking and how the metals were, most of the metals in gold in particular are held
Yeah.
by central banks or owned by central banks.
Oh
And
yeah. Hmm.
so my question now is with all this other institutional demand, and you know what? Everyone talks about oh, buy metal because the dollar is going down and all of this, which makes valid sense altogether. But as the metal prices rise, and assuming gold is held, the majority of the gold that's above ground and has not really gone away is owned and held by central banks. Well, their balance sheet is actually increasing significantly as the metals rise themselves. So, you know, I don't see how people can actually talk about it as an anti-hedge against central banks because if they're the biggest holders and the metal prices go up, well, hey, their value of their metal holdings go up. Now, will the physical metal be taken away from central banks? I doubt it. I don't even think they're selling it. They've been net buyers for the last couple of years. So I just thought it was kind of an interesting dichotomy where people are buying into the gold and precious silver space, saying it's a anti-fiat currency, yet central banks own a lot of the gold. So I don't know if we're kind of defeating your own purpose.
Yeah, it's an interesting way to look at it because it's their job to, support the stability of the currency
Here,
that they're issuing, right? So it's an interesting way to look at it. I mean, their job is to protect, who they represent, right? And that seems to be with gold right now. That's a big part of it, right? Central banks, it is the second largest asset on the books besides the US dollar as a reserve to them, right? Overtook the euro.
yeah.
And that's something you got to think about. What like they are in the know about what's happening all over the world, right? They are in meetings that we are not a part of. They are doing that stuff, right? So you gotta take the cue from some places, and that's one of them.
I
That's
agree.
one of them. You
Uh-huh.
know,
Yeah, I agree. And even with the central banks owning it, and let's say the metals continue to rise, I think they also see the writing on the wall with fiat currencies and the US dollar in particular, because now you've got the Genius Act coming in with Trump, and he's talking about introducing stable coins into the market. So, I'd love to cover the metals, but I also am looking at fintech in general and this new financial paradigm that we're entering into with cryptos being a part of it, blockchain. Um, and that today or it was yesterday, sorry, the SEC just announced with the depository clearing agency for
yep.
security that they're going to tokenize all stocks, bonds, and ETFs starting next year. So the application was put in by the clearinghouse, the
Mhm.
DTCC, and the SEC didn't stop it or put any red flags on it. So we're entering this whole era of tokenizations. And I've talked about digital gold and digital gold ownership for a while, and I think that's going to be a big part of this tokenized world we're entering into in terms of the new financial paradigm. So, yeah, I get a lot of flack and negative feedback from people saying, "Oh, why are you buying, digital gold or these ETFs and stuff?" But you gotta remember, there's a lot of money, whether they're in pension funds or tax-free savings accounts
Mhm.
in Canada or 401k. And they have to be held at those metals have to be held at a vaulting facility that's been approved to own in those 401ks and stuff. So I
Yeah.
we're going to see an era where gold tokenization and silver token, all commodities are going to get tokenized and put on the blockchain. So I just see a whole financial era where it's all converging onto this platform, and gold and silver is not going to get left out.
No, no, most likely not. And we have to take a step back and understand that there's times where you want layers in between that help you, right? Securities help it helps you invest, and when you have layers and funds help you invest all over the world and all of that risk, you're adding risk down the chain, and sometimes it's good for people and sometimes it's not. And digital tokenized gold and silver is not a new. It's not new.
Yeah.
Will it play a role? Potentially, but a lot of things are being tokenized, and there's a lot of nothings gaining a lot of value,
Sure.
right? There is value in everything that's digital, right? AI and some coins, but right now there's a lot of value being put on the tech industry, like it has before, and that's okay. But I would caution people to put all their eggs in one basket because that is a very risky thing to do. And even if you're looking at tokenizing gold and stuff like that, there's added layers and risk to when you're putting somebody in between. So when I was thinking about just this uh, yesterday or the day before, because the tech stocks and the AI stocks are really throwing the market for a whirl, right? Are they overvalued? Are they not overvalued? Michael Burry is shorting several of them, right? And he did very well that before, right? So what happens there? I think now is with all of that, it only makes more sense to have a real hedge somewhere else because you just never know. You just don't know what's going to happen. Like, yeah, you could make a lot of money in various tech stocks. You can lose a lot of money. You can invest and do very risky private placements and anything else that can give you tenfold. But lots of that stuff has a lot of risk to it, and it would be very prudent and proper to hedge with something real somewhere.
Oh,
And that I wouldn't even say is having a tokenized gold in between, right? It's having a real assets in your home and or in a vault that you have in your name. Now I'm speaking the book a little bit, but the topic is about what's going on with tokenization and we have Bitcoin and is it going to continue to gain value or not have value, get backed by nothing? Nothing can go on for a while until it pops. So you never know what's going to happen, right? So I would say, like, if you're really thinking about you can't not having a whole lot and nothing that's giving you a lot of value may blow up in your face one day. And if you really think you should have something you can touch, and I think we're all human, and that's going to be something that's going to really going to make a difference at some point in the future.
sure, absolutely.
Or do you want a house or you want a house in the metaverse? So, I mean,
And
it's
that's the thing I've always been telling people, just go back to like getting into hard assets, like physical things
yeah,
as well as
yeah,
part of your diversified approach, whether it's, an actual home, your metals, a business that has inventory. I actually like that business model too, because you're buying things
mhm,
at
yeah,
wholesale distribution pricing and you can always sell retail in the worst case scenario, you bought it at
sure.
cost, right? So kind of things like that make sense to me. Um, and so I want to pivot into talking about the metal itself, but whether you want to buy physical metal and take ownership and storage yourself, or the idea of having it vaulted. Now, maybe the average retail person who doesn't have a lot of money, it makes more sense for him to, just buy some coins, whatever, rounds and hold it themselves. But obviously for someone who's got quite a bit of
Mhm.
high worth and wants to have it stored at a facility, that it's something they should consider. So maybe we can talk about that very quickly. Yeah, we've got about five
Sure.
minutes.
Yeah, let me just take a start with one fact is that gold and silver are still around before any stock we know right now, any token we know right now, anything's investment right now that we can think of. It has stood the test of time. It is still an investment and it still has value. And the reason it's still around is because it's easily tradable, it's fungible, and it's something that will not go to zero. And when you're buying that asset, you got to think, how do I want to own that? Right? The point of gold and silver is because it exists.
Yeah.
So are you going to buy something, a fund, to buy something that exists when you can just buy it, the actual product, right? So if you think gold's going to go up for a month, there's no point in going to a precious metals dealer or anything and saying I want to buy some metal. Because there's the metal, it has a little bit more of a cost, so it's real. You might as well go on and buy GLD, SLV, PSLV, PHYS, you name the ETFs, right? That's going to give you a small spread and you can trade it, you can short it if you want. You don't want to do that. But if you want to hold a long-term investment and you're set with these choices, and the choices are, a security that's like a ticker and it's got about four people in between, trustee, vault, your brokerage custodian, it's name it all. It's all in between, right? And it tracks the gold. It doesn't say anything. It says it tracks the gold index. You know, you can come and take a step back and say, okay, the reason this has value and people do it is because it's a real thing. You might as well try and get as close to it as you can. So why not actually go for the real physical metal, something you can hold for a long time? Now, so let's say you're okay, I want to buy physical metal. And I could go on, we could be here for days talking about all the different types of metal, 1 ounce bars, 10 ounce bars, 100 ounce silver bars, this JM Bullion, Engelhart, all these different brands. They're all fantastic brands. LBMA is very important. But you want to get into the physical. Now, many people bring it into their home, but at one point, that metal is not covered by your insurance unless you tell them about it and then they give you a special rate, right? So and it's dangerous. So, but that's okay. It's valuable. I mean, lots of people probably listening to this have diamond rings or expensive watches, and, maybe they don't think about that stuff, right? But, gold and silver can really add up. You want to think about vaulting. And when you look at vaulting, yeah, there comes with a cost. But actually, many providers can get that cost to the same as a fund, or even cheaper, right? And that covers all insurance that you would be paying tenfold at home, right? And the best part about having a vault is that you can sell it any time without having to put it in the trunk of your car. But the best also part is you can come and get it if you want to bring it home. So when you're having this physical, there's a lot of factors you want to look into, but there's certain levels where you just want to consider different options. And in the end, the physical is the most important part, itemized and in your name.
Yeah.
And in the future, you can do whatever you want with it. And that's long term, not within a few weeks.
Yeah, so I remember back in 2012, 2013, I wrote a report, it's about over 100 pages long at the
Mhm.
time, how to buy bullion through dealers and storage through vaulting facilities, um, and transportation. At the time, it was probably one of the most complete compendiums on the topic. And this is
Yeah.
how I think a part of I met a lot of the vaulting facilities and bullion dealers around the world. And the one thing I want people to keep in mind is you can buy the metal, store it yourself, and have it yourself. Or if you decide to buy through a bullion dealer that has a storage offering at Vault, the one thing you want to ensure is the difference between allocated and unallocated. So
Mm-hmm.
could you maybe take a minute or two to explain that? We've got about 5 minutes left on the podcast. I just want to
Okay, sure.
talk about it really quickly, but the difference between allocated and unallocated, so people get an understanding if they're going to use a vaulting facility, what the difference is.
Well, quite simply, is like it's unallocated or allocated. In the end, do you have anything directly owned by you, allocated to you, right? You can like when you think about allocation, like you get like when people when there's a product that's really popular and we put an order in, you can get an allocation in the wholesale market. You know, those who are in maybe in a different business that might be getting an allocation from a car dealer, right? A new, brand new type of car, and there's going to be allocations because it's not already there, right? So an unallocated account, it's just you don't have anything specific. They may have all these bars, they may have some gold, but nothing's allocated to you, so you don't have any claim. You have a claim on in the end if they decide to liquidate everything, but you don't have a direct claim on it at all. An allocated account means it's your ownership, right? Right. So they can't claim it. It's like a bank account, right? It's you're just a unallocated. You're just they owe it to you. You're a debtor of some sort, right? Like
Yeah.
a bank account. So when you have an allocated account, the bullion in the end, there's some part of that is claimed ownership by you. So that ownership is not on the vault or possibly the third party vaulting custodian themselves, right? That subcontracts with the vault. There's no ownership by them, which means there's no creditor access, right? So if they go out of business, or the bullion dealer that you're contracted with goes out of business, the there's no claim on your bullion. The debtors in the to the company, the people who hold debt or shareholders don't have any access to that. So that's why you want an allocated program.
Yeah.
You're trying to eliminate that risk, and one thing, you can never eliminate risk. You can always reduce it, right? You can never eliminate it, no matter what, but you can always try and reduce it, and that's very important. It's not one of the most important aspects and things you need to do when you're buying and investing in gold and silver.
Yeah, absolutely. And we could probably go on discussing the types of bullions to buy, different vaulting facilities around the
Yeah, yeah,
world,
yeah.
what
Another
else to
time.
look for.
Hmm.
I think that'd be good for maybe another podcast itself, is just talking about the actual bullion and storage
Hmm.
facilities around.
Hmm.
So we'll leave that for another podcast. But um, yeah, we've got a few minutes left. If there's anything you'd like to kind of share the last minute, or maybe how people can get a hold of you, share the details, that'd be great.
Yeah, they can. I'm happy to talk to anybody about what they're looking to do. If they have any questions on the market, my name is Brandon Green and our company is Neptune GBX. My email is B like my name, green like the last color, green like the color is my last name at neptuneglobal.com. I guess you can put it down
I
in
will
the
put.
down below, and I'll be happy to discuss any of these with them.
Perfect. Thank you for your time, Brandon. I look forward to
Sure.
maybe doing another follow-up
Yeah.
podcast and get discuss the actual bullion itself, vaulting around
Yep.
the world. Maybe even discussing options for various locations for vaulting, like what's the difference between vaulting in Singapore, Caymans, Toronto, New York,
Sure.
Singapore, Switzerland. So there's lots of options there and things to look for. So yeah, maybe we'll save that for another podcast.
Absolutely happy to.
Okay, perfect. Thank you, and we'll talk soon.
Thanks, Vin.
Cheers. Thank you for listening to this podcast interview with Brandon Green. I look forward to having him on the channel in the future, where we actually get into discussing the various types of bullion, whether it's coin, numismatic, bars, which form to own, as well as various options for vaulting around the world, as we discussed at the end of this video. If you did like this video, please don't forget to like and subscribe, and take care, and we'll talk to you soon. Bye.